Hey everyone, PJ back with another video today for Watch Trading Academy. And one of the things I wanted to talk about today is the power of watches as investments. You know, something happened in the markets recently that really fortified this ideology that indeed watches are investments and they are going to be doing fairly well in the future. So what has happened? Why has it happened? And what have we learned from it? So short, like the short version of it is basically you've noticed that the watch markets over the last maybe 7 months now have been trending down. And they've hit a bottom that, most people said, was very unfortunate and made them lose money. Some would argue that there was market manipulation, others would argue that watch pricing was just too high, and others would say that in simple terms, the bubble popped. But I want to go a little bit further and deeper dive into this idea of a bubble because it is a little bit different here in the world of watches, and something has happened in that so-called bubble that reinforced this ideology that watches are indeed investments. And while it's very true that there was a lot of watches in the markets that were overvalued and dealers were manipulating the fact that supply shortages were there or manipulating the supply chain as well to create incredibly high pricing, there's also one other reality that came true, which is that once that market manipulation was done and the watch market did take a dive, it didn't take a dive to zero and not even to MSRP, which is very, very important because it just showed us that even in the worst of times, watches are still highly driven by supply and demand, and more importantly, have what we call a price index, something that you only see in real investments. And so it is now the time to put on the table that watches are indeed investments, and they are starting to follow a very strong pattern of asset investments, just like real estate. Now, historically, if we look at real estate, there's no way to say that real estate has always been on the up. But it is true that historically, if we compare 10 years, 20 years, 30 years, 40 years, 50 years, that real estate has always been a good bet. So as long as you look at it long term. Short term, it may create liquidity issues. It may be located in markets that do have turmoil, go up, go down. And there is also a correlation of investing in real estate that comes from supply and demand. If a lot of supply is available in a neighborhood, usually the demand is not there, pricing will adjust. But historically, on a 20, 30-year basis, real estate has always been a safe bet. And we can now say that the same can be said about the world of watches. Watches are ultimately and have always been a better bet. Now, here's where things get a little bit interesting. You see, in the past, we looked at watch investments as a blanket statement saying, are watches good investments? Now, a big piece of data would tell us that not all watches are investments. Certainly, some watches are never going to really gain any historical dollar value, and over time will even devalue to near, very low numbers. But some watches have, not very minimal, a large portion of watches have been trending up on a year after year basis. And if we compare the data where those values were for the same watches 8, 10 years ago to even 20 years ago, we'd notice a pattern always trending up, no different than real estate. So it leads us to this next question. Are watches indeed all good investments? And the answer is no. Now, are most watches good investments? The answer is also no. But just no different than real estate, there are watches that can form an incredibly good investment portfolio. And now, if you start to look at the world of watches, you start to compare it to the world of real estate, and you start to realize that not every home is a good bet to make money. Now, some homes are a good bet to preserve money, meaning that it is very unlikely that over the next 10 years living there, you are going to find yourself in a position where the home is worth less than what it was 10 years ago. However, it's also said that there are probably better homes and in better markets you can purchase that are going to go up significantly higher than other homes around them. Now, in addition to that, you could probably say that there are distressed homes or homes you could buy at a lower value that are probably going to have a higher benefit. Now, all of these are exactly directly correlated to the watch market to the T. Like there are certain models that are going to have astronomical gains over others, usually hard to get. Let's compare that to waterfront property here in South Florida, astronomical increases in pricing just based on the sheer lack of supply, right? So that's something you can compare to some of the rarest watches out there. Now, the same can also be said that there are going to be certain watches, like maybe a Daytona that's on the simpler side and something that's not going to be like a green dial that's going to keep going up, but rather a normal stainless steel Daytona that's going to go up little by little year after year. And you could notice that that might be a good wealth preservation strategy rather than a wealth creation strategy. So again, no different than a home perhaps maybe in a neighborhood that is not very popular, not in South Florida, but rather maybe in North Florida that is not going to have a lot of traffic or a lot of demand and a lot of supply. So what you're going to run into is a house that is going to be worth exactly what it is a few years down the road and literally has gone up a little bit. Now, in addition to that, it allowed you to live in it completely free and clear because it's gone up very little, but at least it's enabled you to get your money back once you move to the next home. No different than the right Daytona that perhaps isn't going to increase in value, but allow you to wear a watch for free. And so if we start looking at the correlation between the real estate market and the watch market, we're going to start to notice three common trends. Not all investments are basically made equal, and where and how and what you buy certainly makes a difference, just like in the world of watches. We're going to take a look at the ideology that while all homes are not going to be incredible investments, not all watches will either. However, all homes will generically be a good source of wealth preservation, no different than all watches, meaning there are a lot of even Hublots, which are trashed on by the industry, that have still retained their value, their secondary used value over the last 10 years, meaning that the same Hublots are basically worth the same thing they were 10 years ago, which means that while someone could argue, well, inflation, this and that, but I would argue that you wore a free watch for 10 years and were able to get your money back out plus some, I would argue that you basically broke even and got to wear an incredible watch. Now, that said, this proves again that almost every single Rolex, every single AP, Patek, etc., will have gained some type of minimal gain, even if they are not very popular or very in demand or do not lack supply, but they are still going to be good wealth preservation tools, no different than real estate in the generic sense. So where or how or why does real estate still remain a better investment? So I would argue that it doesn't. And the one thing real estate doesn't have that watches have is this really simple and very, very easy to look at concept of unregulated, which is something that is huge in the watch market. You don't have to pay your capital gains tax as heavy as you would in real estate, and there's no paper trail like there is in real estate. You don't have to go through title, you don't have to use an agent, you don't have the overage of these little fees that keep getting drained out of you, and you don't have a cost to carry. That's something else that's really huge, meaning like you don't have property taxes, and the actual asset itself does not keep costing you money each and every year you use it, right? So that's a big deal. Like in a car investment, you would carry insurance or things like that, and that has a cost to carry of cash. But in the world of watches, you really don't have that, which gives you a competitive advantage there. And the second advantage here is the liquidity of the asset itself. Let's say, for example, you wanted to buy a $4 million home to park your money, not because you wanted to live in it, but rather this is a second home and you wanted to park your money so that it's not sitting in the bank. Well, if you parked your money in watches and needed to take some money out, some money in, etc., you could liquidate some watches versus others and create some kind of liquidity or cash event at any given time in segments, not all at once. And you wouldn't have to necessarily change the way you do business as a result of just liquidating 2 to 3 watches. So you don't have to change your overall strategy, you have more flexibility in it. So where does the difference come in, and why is real estate still a better or more sought after investment? And this is the big difference between the two, and where real estate still has a competitive advantage is that real estate has a means of creating cash flow. So there's a way to actually rent your home or literally create income from your home, but that's only assuming that you bought the home correctly at the right dollar in the right place, because not all rentals will literally come out on top. The cost of repairs, the cost of cash to carry, the cost of the loan, all of these things may equal basically a break-even situation as well, just not costing you anything to basically carry the item because someone else is renting it. So there is a lot of pros and cons to both forms of investment, but it is very exciting to actually note that even in the worst fall of the watch pricing that we've ever seen over the last 5 to 6 years, we have still seen that watches have held strong at pricing significantly above MSRP and have held even stronger in the sense that watches did not only go down past their MSRP level, but they did not go down to zero. And so this ideology that watches are just terrible investments and they're just in a bubble couldn't be further from the truth. I'm still a believer that historically we still see 5 to 10% increases year after year just based on price increases in the watch market, and I'm really excited to finally have enough data to be able to effectively say that watches are indeed a good investment, and they are outpacing almost every market out there despite the liquidity events that were triggered over the last 6 months here in the United States. So I'm pretty excited to be able to teach you guys this at Watch Trading Academy, which is why if you still want to learn how to invest in watches, learn how to wear them for free, or basically learn how to create either a side hobby or a side business doing this, you need to click the link in the description right now and watch the free training. So you can learn if you have at least $1,000, access to a post office, and a computer, could become a watch trader as early as tomorrow morning, and you will be given all the tools to do so right there. So please click the link, make sure you like, subscribe, turn on notifications, and let me know in the comments if what I said makes sense or if you need me to explain it further in a future video. I'll catch you next time on another Watch Trading Academy video.